How's it going, everybody? Welcome back to another episode of Top Buy, Top Sell here in the AAII Edge Finder, where we're going over our number one buy setup and our number one sell setup of the day. But of course, like usual, before we get into that, we're going to take a look at two different things, the first being COT data. So let's go ahead and get right into that. Now, new COT data does come out every single Friday. However, the report hasn't been released yet. It usually gets released later in the afternoon, but that's okay because even though things do change week by week, it usually doesn't change too terribly much. So everything that's long and short here should still be pretty relevant when the new COT data comes out. So what we see here is our long and short setup, with the most short being over here on the left and the most long over here on the right. And our top three shortest assets when it comes to what COT traders or institutional traders, how they are positioned on all of these different assets here. We see that the Canadian dollar is actually the most shorted asset when it comes to COT data, with 90.25% of open trades on the Canadian dollar being short from institutional traders, followed up by the Swiss franc that is still pretty short, but not nearly as short as the Canadian dollar at 76.78%. And then we see bonds. We see US 10-year yield bonds at 73.38%. The Japanese yen, which has been really shorted by COT traders for a long time, not quite as short anymore. You can see it's up closer to the 50-50 range. We see the US dollar leaning on the bullish side at 67.59% long. And oil, silver, and gold are still our top three most long assets from COT positioning, with gold being the most long at 83.39%. Our latest weekly COT filing is our report here that compares the last COT data to the most recent COT data. And like I was just mentioning, the Japanese yen, which has been historically, at least over the past weeks, one of the most shorted assets, is actually now moved up into the 50-50 range after a huge net change from last week to this week. We saw just 1,153 long contracts added on the Japanese yen, but look at how many short contracts were closed. We see nearly 61,000 short contracts on the Japanese yen were closed from last week to this week, moving it way up into the 50-50 range, where beforehand it was definitely a little bit more shorted than that. We can also see the New Zealand dollar here at the very bottom was our most negative weekly change, with 7,456 long contracts taken away, just 2,113 short contracts taken away. So let's go ahead and move on into retail positioning. Also, I'll mention really quickly that if you want a more in-depth look, feel free to pause the video. You can see the total number of open long contracts and short contracts on all of these different assets here, as well as the change in long and short contracts, again, from last week, the most to the most recent COT update, the total long and short percentage, the net change percentage, and the net positioning here. But I'm going to move on into retail positioning so we can get a sense of what day traders are long and short on at the moment. And we're going to start with our major currency pairs. These are US dollar pairs, and we see that right now the most long most long pair day traders are trading right now is USD CHF. 69% of open positions from retail traders or day traders are long USD CHF. And on the short side, we see the pound dollar and the euro dollar at 65% short and 70% short from retail traders. Moving into minor currency pairs here, we see that these pairs here are up over 60%. I should also mention that this red here means that this is a contrarian signal, so it's actually a bearish signal for us. When the majority of the crowd is heading one way, we are oftentimes looking to go the other way. So because these are so heavily long from day traders, we are looking to possibly short these pairs here. And these are our most shorted pairs from day traders, and that is getting a blue bearish signal there. Let's check out metals, indices, crypto, and commodities. Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today. And we can see that the overwhelming majority of all of these assets are long from day traders. We see copper, Ethereum, oil, Bitcoin, iron, platinum, Russell, silver, and the NASDAQ all long from day traders, again, giving us a slightly bearish signal here, whereas the S&P 500 and the UK 100 are being shorted by day traders, giving us a slightly bullish signal there. Heading back on into top setups, I'm going to remove all of the neutral biases, and we're going to take a look at our full list of bullish, bearish, very bullish, and very bearish biases. Right now, we only have one very bullish bias, and it is Euro USD with a score of +9, and we have two very bearish biases, CAD Yen and Dollar Yen, both with scores of -11. So we're definitely going to break down Euro USD because it is clearly our most bullish signal right now. And between CAD Yen and USD Yen, I think that I'm going to take a look at CAD Yen because we're already looking at a dollar pair here. So just to switch it up and give us the most amount of information, let's break down CAD JPY. And in fact, normally I start with the bullish signal, but every once in a while I like to switch it up. So why don't we actually start with CAD Yen? I'm going to head on into Forex data scanners, Euro USD up here at the very top being the most bullish, but we're going to take a look at CAD Yen down here at the very bottom with that very bearish bias score of -11. COT data is a score of 0, and retail sentiment is a score of -1. Like we already mentioned, we kind of went over both of these COT datas already, but the Canadian dollar is by far the most short asset when it comes to institutional trader data at 90.25%. The Japanese yen right now, kind of in the middle. It's sitting closer to 50-50, so it's kind of a neutral bias there, but both weekly changes were actually positive, even though the Canadian dollars was technically, I mean, that's pretty much break even. That's about as low of a bullish score that you can get in terms of weekly change, but the weekly change for the Japanese yen was very positive. Retail traders right now, 66% of retail traders are long CAD Yen. Again, that is giving us a contrarian -1 score there. Seasonality is also a score of -1. So that means that over the last 10 years averaged together in the month of August, historically speaking, CAD Yen tends to trade lower, which has been happening this month as well. Speaking of trending lower, our trend rating score is a -1. And to get a better look at that, we can head on into price forecast, or we can actually take a look at the daily chart for CAD Yen. So I'm going to search CAD JPY right there, and there we go. So for the end of July into the beginning of August, we saw a huge downtrend in CAD JPY. It has popped up a little bit since then, but the price forecast is projecting that it continues to move a little bit lower. You can actually see this is a not too much of a new feature, but relatively new in terms of Edge Finder. You can actually see the score change here as things get updated. If a score changes, you can see that it's marked here with that little green arrow. You can also see, it's a little hard to see, but there is a little red arrow there as well, letting you know that there was a recent score change. So even though the trend reading is a score of -1, it actually got a plus score recently, raising it up from -2, and that is likely because over the past couple of days it has trended a little bit higher. However, it is forecasting that it is going to move lower before it moves even higher. So we can finish up here with our economic data. We see GDP scores of -2, same with retail sales and employment change. Manufacturing and services PMI, both 0 scores. Inflation and unemployment rate, both -1 scores, and interest rates also get a 0 or a neutral score there. Now, when it comes to breaking down the economic data table, you see that we have GDPA listed and GDPB listed. GDPA is going to be our first currency pair listed, so that is going to be the Canadian dollar. GDPB is going to be the second currency listed, so that is going to be the Japanese yen. And we just want to know, did it meet forecasted GDP predictions? Did it miss forecasted GDP predictions, or did it beat forecasted GDP predictions. If you want a full breakdown of what that looks like, we actually have all of that in our fundamental data tabs here. I'll actually show you really quickly. Economic growth here, GDP growth. We can take a look at GDP for all of our different currencies. We can see the forecasted and actual amount that came out. So here's JPY. I'll just show this to you really quickly. We can see that the forecasted number was 0.6%. It actually came out at 0.8%. So that's an idea of what we're looking at when we break down GDP even further in these tables. But again, to make it more quick and a little bit simpler, we're just looking at, did it meet, miss, or beat GDP expectations? Same with all of these, PMI, retail, all that stuff. Did it meet, miss, or beat the forecasted expectations? And so again, Canadian dollar missed GDP expectations, Japanese yen beat GDP expectations. That is giving us our -2 score there. Manufacturing PMI for both Canada and Japan was a miss. Services PMI for both Canada and Japan was a beat. So that's kind of a wash. That's why we have 0 scores there. Retail sales in Canada were a miss, but in Japan they were a beat. That is a -2 score. We see CPI data here forecasted at 2.9% in Canada, but actually came out at 2.7%. And in Japan, we saw it forecasted at 2.8%, but it came out at, it also came out at 2.8%. The employment change in Canada came out as forecasted, just lowering just a tiny bit, but forecasted change in Japan was 0 or neutral, no change, but came out positive at 0.37%. The unemployment rate in Canada was forecasted to come out at 6.4%, and it did. The unemployment rate in Japan was forecasted to come out at 2.6%, but ticked just a little bit lower at 2.5%. So there we go. There is all the numbers and data backing up that -11. Very bearish bias on CAD yen. Now let's move into the bullish side of things with euro dollar. Very bullish bias, score of +9. COT data is a score of +2, and retail sentiment a score of +1. Taking a look at this, we can see that the US dollar is up over 60%, so that is a bullish indicator for us, whereas the euro dollar is closer to 50-50. The weekly change for the euro, however, was positive, and the weekly change for the dollar was negative. Retail sentiment is showing us that 70% of retail traders right now are shorting euro dollar. Again, that's why we have a +1 score there. And seasonality, also a +1 score. That means that over the last 10 years, averaged together for the month of August, historically speaking, euro dollar tends to trade higher. Trend reading score right now is a +2 score, and similar to what we saw with CAD yen, we see that this has actually changed recently. We see that little green arrow, meaning that beforehand the trend reading score was just a +1. Recently it has ticked up to a +2, and let's go take a look at what that looks like in our price forecast page. So if I pull up euro dollar, there it is right there. We can see that throughout the month of August, this thing has been a little bit flat, but mostly moving up overall. From August 2nd all the way to August 6th, we saw a big trend higher before a little bit of consolidation. It just kind of ran flat here for a little while, but then August 12th up to August 15th, which was yesterday, we saw another move higher on euro dollar. From yesterday to today, it has dipped a little bit lower, but again, price forecast is predicting that this thing is going to continue to move higher before it moves much lower. Let's finish up here with our fundamental data. We see GDP has a -1 score, retail sales has a -2 score, manufacturing PMI, inflation, and employment change have +2 scores, services PMI, unemployment rate, and interest rate data have a 0 score. So again, GDP A here is going to be the euro because it is listed first. GDP B is going to be the dollar because it is listed second. And we see that the euro just met GDP expectations, whereas the dollar beat GDP expectations. Manufacturing PMI was a beat in the euro area, and it was a miss for the dollar. And services PMI was met for both. Retail sales numbers were a miss for the euro, but a beat for the dollar. Inflation data, CPI was forecasted at 2.4% in Europe, but actually came out at 2.6%, whereas in the US it was forecasted at 3%, but ticked a little bit lower down to 2.9%. We see the unemployment rate was forecasted at 6.4% for the euro, but actually ticked up a little bit to 6.5% in Europe. And we see something similar with the US. It was forecasted at 4.1%, but actually came out at 4.3%. So there we go. There is all of the data and numbers backing up that very bullish bias score of +9 for the euro dollar. I hope you guys enjoyed this video, and if you're interested in getting the Edge Finder for yourself, you can find it in the links down in the description below. You can also find it on our website, a1trading.com. And if you like what you saw and want to get the Edge Finder at a discounted price, you can use promo code A1YT at checkout for a discount on the Edge Finder.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.